Hello, good day, everybody. So, today we will be talking about the introduction to financial asset and investment in equity security. So, but before we are going to start, I would like also to give credit to our references for this topic. We have here um, Sir Asuncion, Ngina, and Escala for the book Auditing and Assurance Concept and Application. Also, we have here Intermediate Accounting 1 by Sir Valix and Intermediate Accounting 1A by Sir Millan. So let's proceed now to the proper discussion. So first is the introduction to a financial asset. So but before we dig deeper to how these financial assets being measured and the theoretical aspect of these, let us also first identify what are those related standards that are connected with this. So we have here the PFRS 9, which is the financial instruments, or IFRS 9. We have also IFRS 13 or PFRS 13 that talks about the fair value measurement, and Philippine Accounting Standards 32, or the presentation of the financial instruments. So before that, a financial instrument and investment. So what are the difference between financial instrument and an investment? Investments, by the way, are assets that held by an entity for the accretion of wealth through distribution of such interest, royalties, dividends, and rental for capital appreciation or other benefits to the investing entity, such as those obtained through trading relationship. Financial instruments, on the other hand, is any contract that give rises to financial asset of one entity and financial liability or equity instrument of another entity. So a financial asset is, according to PFRS 9, a financial asset is any asset that is a cash, an equity instrument of another entity, a contractual right to receive cash or another financial asset from another entity, a contractual right to exchange financial instrument with another entity under conditions that are potentially favorable, or a contract that will may be settled in entity's own equity instrument and is not classified as an entity's own equity instrument. So these are the definitions, or these are the definitions of financial assets. So this definition might be able to help us to segregate items that are being presented, either they qualified as a financial asset or not, because all of the items in the asset side of the financial position of the company is not classified as financial asset. So these are only things that we need to classify. First, the cash, an equity instrument of another entity. When we say an equity instrument of another entity, it is either a secure investment on equity security, like preference share of another entity or an ordinary share of another entity. A contractual right to receive cash or another financial asset from another entity. This is already discussed to us before in the topic was uh, loans and receivables, right? So when we have a contractual right to receive cash, we have a paper or anything that we might be able to receive cash in exchange of those. So let's say for example, you have a sale or you sold something, and then instead you are paid cash. It was on credit, so therefore you receive a certain paper that there is a contract in there that you will be paid cash on the maturity date. So like receivables, note receivables, those are examples of contractual right to receive cash. And the others is what we call the derivatives. So by the way, we will not be going to discuss derivatives in this portion, because there is a separate discussion of derivatives and hedge accounting, or how do we account derivatives on hedge accounting, and those derivatives that are not classified under hedge accounting. So these are the three major classifications of financial asset. First, we had the debt security, equity security, and the derivatives. So the debt security is the cash and a contractual right to receive cash of another financial asset from another entity. So this is the example of the debt securities composes of bonds or note receivables or even a cash. It is classified as a debt security. And equity security, an equity instrument of another entity. So I told you already a while ago that examples of equity securities are preferred shares and ordinary shares. Next, we have here the derivatives, which is it has its own accounting treatment if it is either a hedge accounting or not. So next is the financial liability. Financial liability is any liability that is a contractual obligation to deliver cash or another financial asset to another entity, and a contractual obligation to exchange financial instrument with another entity under conditions that are potentially unfavorable, or a contract that will or may be settled in the entity's own equity instrument and is not classified as entity's own equity instrument. So, what was the reason of actually identifying financial asset from financial liability? It is because later or like part of our activities or quizzes in intermediate accounting 1, we were going to classify different line items on the statement of financial position. So um it is very important for us to identify on what are those classifications or what are the classifications of those line items in our financial position. And also every line items based on their classifications, they have different measurement or recognition. So that's why it is very important for us to identify how are we going to classify them and how are we going to characterize each item in order for us to correctly measure or recognize every item and every changes on that specific item. So that's it. Next is these are the examples of financial asset, non-financial asset, and financial liabilities. So these are actually pictures taken from the book of Sir Asuncion and book of Sir Millan. So examples of financial asset, cash and cash equivalents, accounts receivable, allowance for bad debts, but this allowance for bad debts is actually on negative, I mean, negative sign, since we all know that allowance for bad debts is a credit balance and it's a contra account of accounts receivable. Next is a notes receivable, interest receivable, paid interest. Okay, there are actually paid interest that are not classified under financial asset. But if the characteristic of that paid interest is not a valuation account to financial liability, then it is still a financial asset only if it is not a valuation account to financial liability. So if we have encountered a problem that it is a paid interest but silent, automatically we were not going to classify it under financial asset because it's not evaluation or evaluation account to financial liability. Investment in joint venture is also a financial asset. Investment in associate is a financial asset. Investment on subsidiary is a financial asset. Investment in bonds and cash surrender value and sinking funds. Okay, so the examples of non-financial asset on their other hands are those merchandise inventory, biological asset, property, plant, and equipment, like building, land, accumulated depreciation, which is a contra asset account of property, plant, and equipment, intangible asset, prepaid rent, claims for tax refunds, deferred tax assets, and gold bullion deposit in banks. So if you have a golds that you have been deposited in banks, then those are not financial assets. Next, we have examples of financial liability. So specific line items that we can actually locate at the liability side of the SPF. We have the payables such as accounts, notes, loans payables, and bonds payables, the lease liabilities, the held for trading liabilities and derivative liabilities, redeemable preference share issued, and security deposits and other returnable deposits. So Initial recognition and classification of financial assets. Financial assets are actually recognized only when the entity becomes a party to the contractual provision of the instrument. So when we say how can we recognize a financial asset? Only when we have the control of that asset. So if we don't have the control of that asset, then it is not part of our financial asset. It was given in the definition that it must be recognized only when entity becomes a party to the contractual provision of the instrument. So if wala ka namang paki or wala ka namang involvement doon sa financial asset, so di mo siya i-recognize bilang sa'yo. So yun lang. So what are the classifications of financial assets? Financial assets are actually classified or measured at financial asset at amortized cost, fair value through other comprehensive income or FVOCI, and fair value through profit or loss or FVPL. There are also financial assets here that are not measured based on these three classifications. Let's say, for example, this one, the investment on associate and investment in joint venture. They have other classifications. They have other measurement, but they are still under financial asset. Let's say investment in joint venture and investment in associate. They have separate accounting standard, which is Philippine Accounting Standard 28. So under that standard, these two must be measured on equity. Must be measured on equity method. Yeah, it was stated on Philippine Accounting Standard 28 that they must be measured on equity method. And investment in bonds, either on it depends. Sorry, investment on subsidiary rather. It depends on if it is separate financial statement or consolidated financial statement. So that's it. There's a lot of classifications, but we will have we'll be having different discussion about these other investments here. But now let us just focus our mind on the major classification or the what we call traditional classification. So financial asset at amortized cost or FAAC. So these are what are those financial assets that mostly classified in this FAAC? So those are held for maturity, asset that are held for maturity. When we say held for maturity, the business entity will wait for the maturity date of those financial instrument. So if those financial instrument will mature, then we can actually collect now the principal and the interest of those financial instrument. That's why they must be classified or they must be measured at amortized cost because we are only expecting to receive the principal and the interest. On the other hand, the fair value through other comprehensive income naman, we are expecting, especially those financial instruments that are available for sale. So if your financial instrument were actually classified as available for sale, then it must be measured under fair value through other comprehensive income. So other definition also fair value through other comprehensive income. You might classify them or you might classify a financial asset under this classification if and if it the sole intention was to collect principal and interest as well as to trade. So if they have those if that financial asset have those two major purpose, which is principal and interest or collecting principal and interest and trading, you must classify them under FVOCI. If and if the financial asset or the sole purpose of financial asset is to trade or held for trading, you need to classify them under fair value through profit or loss, or you need to measure them under fair value through profit or loss. So we will going to identify later on why is it important to actually segregate or to identify their classifications because there are a lot of accounting treatments or different accounting treatments based on this uh, classification. So, but before that, what are the basis of our classifications? By the way, what are those things that we need to um, consider? So we have two basic classification bases. Sorry, we have two bases of classification. We have the contractual cash flow characteristic or the SPPI test. SPPI means sole intention sole intention of collecting principal and interest. Parang ganun siya. And we have also the business model test. So we have here the three major financial asset, the derivative, the equity, and the debt security. Debt security, and we have also here the two tests. So again, what is the purpose of SPPI test? To actually identify if the financial asset meets the qualifications that the purpose only is to collect principal and interest. So let's look at here the derivative. What was the purpose of derivative? Let's go back at the definition sa derivative. Ano siya? A contract that may be settled. Sorry, ito. A contractual right to exchange financial instrument with another entity under conditions that are potentially favorable to us. So, which means derivative or the derivatives, the purpose of them is not collecting the principal and interest. So, therefore, it fails the SPPI test. So, if it fails the SPPI test, then it must be or derivative is traditionally measured at FBPL. Okay? But only derivatives that are not included in hedge accounting. So again, derivative fails to pass the SPPI test or contractual cash flow characteristic. Then therefore, it must be measured at FBPL. Next, equity security. Now, what is equity security also? It is an equity instrument of the other entity. Now, what was the purpose of equity security? Thus, we invest on equity security in order for us to recollect the principal and interest? Well, of course not. So then therefore, it fails the SPPI test. So that's why traditionally, equity securities are measured through FBPL. And if the board of the directors were elect or we have an election to measure that equity to FVOCI, if equity security is supposed to be held as trading, and if the board of directors will vote to reclassify it as available for sale, then it must be under FVOCI. Yan. So, debt securities now. The purpose ba of debt securities is to collect the principal and interest? Yes. Why? Let's take a look at the examples of debt securities. We have here contractual right to receive cash. So what are those contractual right to receive cash? Let's say for example, the notes and the accounts receivable. So, 'di ba, if those accounts will mature at the end of the day, we're going to collect the principal and the interest, right? 'Di ba? As what we have remembered from our receivables, loans and receivables, that annually we collect interest. So that's it. The sole purpose of the security actually is to collect the principal and interest. So that's why it passed the SPPI test. So under the from those three financial asset, only debt security passed the SPPI test. So let's move on now to business model test. So what does it mean when we have a business model test? So since these two equity securities now failed the SPPI test. So they are all irrelevant in business model test. The only thing that the only financial asset that can we classify on the business model test is the debt security. So what are those? And dapat yan diyan 7. So principal and interest, sole purpose ba ni debt security under business model test is principal and interest? If yes, then it is measured at amortized cost. So ano yung mga debt securities na measure na ang purpose lang is principal and interest, yun yung mga notes receivable tsaka accounts receivable. If ang purpose nun is to collect the principal and interest, amortized cost lang talaga yun. And kapag ang purpose niya naman is both principal and interest or collecting principal and interest at saka trading or ibebenta mo siya, so you should measure them as FVOCI. Kapag naman ang debt securities mo is ibibenta mo lang at saka wala kang pakialam doon sa principal and interest kung makukuha ba or hindi. So, i-measure mo siya through FVPL. So, yun yung dapat nating tandaan under business model test and contractual cash flow. Kaya we have these three classifications. Saan sila nanggaling? Dito sa contractual cash flow test and business model test. So, sunod. Yeah, under PFRS 9, we have also here reclassification. So, balik tayo ulit dito. 'Di ba napansin natin dito that only debt securities has many reclassification or classification, may amortized cost, may FVOCI, at saka may FBPL. Under sa FPFRS 9, it prohibits reclassifications of equity security upon subsequent measurement. Napansin natin dito na may dalawa tayong classifications on equity security. We have FVPL and FVOCI. Now, if naka-acquire ka na ng equity security, let's say for example, nakabili ka ng ordinary share sa XYZ Corporation. So, nung nabili mo na yon, automatically, dapat ma-measure mo siya at FBPL. Ngayon, mayroong board election or nag-elect yung board nyo na kailangan i-remeasure siya or i-classify natin siya sa FVOCI. Kaya ngayon, instead na FBPL siya, naging FVOCI na siya. And it is irrevocable. Ibig sabihin, hindi pwedeng from FVOCI ibabalik mo siya sa FBPL kasi it is irrevocable at yun yung nasasabi sa PFRS 9. Ngayon, sinasabi dito na dapat daw di pwedeng i-reclassify ang equity security upon subsequent measurement. Ibig sabihin, kapag na-record mo na siya at FBPL, habang buhay na siyang FBPL. Kapag na-record mo na rin siyang FBOCI, habang buhay na siyang FBOCI. Hindi pwede na January 1, FBPL siya. Pag December 30, gusto niyong gawin siyang FBOCI, no. It is a big no-no under PFRS 9. Okay? So what we have here also is under PFRS 9, it allows only reclassification among the different categories of financial asset classified as debt security. So only si debt security lang yung ina-allow ni PFRS 9 na magre-reclassify. So if financial asset through amortized cost reclassified to FVPL and vice versa, FEAC to FVOCI and vice versa, and FBPL to FVOCI and vice versa. So, pwede nating i-reclassify si debt securities. And merong iba't ibang accounting treatment dyan na matatakal natin soon sa debt securities. But ngayon, ang ating focus muna ay si accounting for equity security. So, ano nga ba si equity security? So, equity instruments is any contract that evidences a residual interest in the assets of an entity after deducting of all of its liability. So, again, example ng ating equity instruments includes ordinary shares, preference shares, and warrant or written call option. So, kapag bibili ka ng ordinary share at preference share sa issuing entity, magiging um, equity security mo na yun or an equity instrument of another entity. So, ire-report mo siya sa asset side, hindi sa'yo kasi hindi naman sa'yo yung ordinary share. Sa ibang entity mo, yun. Sa ibang entity yun, kaso binili mo. So, nasa asset side pa rin siya, pero hindi sa equity side mo. So, classifications of investment in equity securities. Diba? Sabi ko kanina sa introduction, mayroong iba't ibang classification yun. So, dito malalaman natin kung anong measurement ba dapat gamitin natin if and if yung equity or yung equity security natin na binili is nagre-represent siya ng ownership. So ano bang ibig sabihin nun? Before that, let us identify first ano nga ba si preference share at saka si ordinary share. So, 'di ba what we have learned from our accounting for partnership and corporation is that si preference share is siya yung share na priority tayo if ever tayo yung bumili. Priority tayo pero hindi tayo yung may-ari ng company or wala tayong significant influence as to decision making. So, ibig sabihin, nakabili ka man ng preference share na mas malaki pa or 50% ba yan or 30%, still you don't have power. You don't still have the power to vote kasi wala kang karapatan kasi preference shareholder ka lang. On the other hand naman sa kay ordinary share, hindi ka nga priority sa dividend distribution kasi preference share, siya yung priority sa dividend distribution eh. So si ordinary share ngayon, hindi siya priority sa dividend distribution pero meron siyang voting power, um, meron siyang significant influence or di naman lahat pero mayroong mga ordinary shares na may mga significant influence. So ngayon, doon natin sila ma-classify kung anong or kung saan classification sila nababagay. So, for example, if bumili ka ng preference share na less than 20% yung ownership niya or nagre-represent ng ownership doon sa binilhan mo, still if BPL pa rin siya or FVOCI. Ganon din kay ordinary share. Pag bumili ka ng 20%, pababa. So let's say 19% pababa. So under ordinary share, FVPL pa rin yan. Ibig sabihin, i-measure mo siya through fair value profit and loss or FVOCI. Pero kapag bumili ka ng ordinary share that mayroon 20% to 50% na nagre-represent ng percentage of ownership, if preference share siya, sabi ko sa iyo, kahit anong percentage, FVPL or FVOCI pa rin yan. Pero pag dating kay ordinary share, nagiging investment on associates na siya. Kasi, yun yung nakalagay sa Philippine Accounting Standard 28 na kapag ang ordinary shareholder or an entity na may hawak na ordinary share at saka meron siyang significant influence as to decision making, automatically i-classify mo siya sa investment on associates. So, kapag ikaw nag-invest ka ng 20% or 50% doon sa isang company, malamang meron kang power to vote kasi ordinary share yung na-receive mo, hindi preference share. Ordinary share yung binili mo. Ibig sabihin, may karapatan kang bumoto as at may karapatan kang mag-decide sa loob ng company 'yon. So, parang naging owner ka na rin doon. Kaya i-classify mo siya ngayon sa investment in associate. Kapag naman 50% to 100 under preference share, FVPL or FVOCI pa rin siya. Pero sa ordinary share, magiging investment in subsidiary mo na. Hindi na siya associate. Investment in subsidiary. Kumaga, you have the total control over a specific company. Ikaw na yung magiging mother company or yung company mo na yung magiging parent company tsaka yung binilhan mo nung ordinary share na nagrepresent ng 50 to 100% magiging subsidiary mo siya. Kaya yon. So hindi lahat ng ordinary share is ma-measure mo through FVPL. Yung iba, investment in associate or in investment subsidiary. Merong different measurement sa let's say sa investment associate either hindi pala. Sa investment in associate, equity method. Sa investment in subsidiary, identify mo if consolidated ba yung financial statement or separate. Pag separate, pwedeng cost, pwedeng equity, and pwede ring fair value. Yun. So, ito yun. Standards that are applicable for investment in preference share. So, dito, walang ibang classifications yung preference share kahit anong percentage yun or anong percentage of ownership yun or ilang percentage of ownership yun, kahit to 100, di pa rin you don't have the power to vote kasi you don't have a significant influence as to decision making kaya fair value as financial asset at fair value pa rin yung measurement niya for value method under PFRS past 32, PFRS 7 at PFRS 9 siya ngayon i-measure yung applicable na standard sa kanya. On the other hand naman, meron tayong standards applicable for investment in ordinary share. 'Di ba sa ordinary share, meron tayong apat na classification. We have at fair value, investment associate, investment in joint venture and subsidiary. Ngayon, dito kay ano yung purpose mo kasi kaya mo binili yung financial asset. Tingnan natin. So, binili mo yung financial asset sa preference share. Binili mo yung equity instrument ng other entity pag preference share para makakuha ka ng dividend tsaka speculation. Ano yung ibig sabihin nun? Pwede kang makaroon ng dividend income at pwede mo rin siyang ibenta. On the other hand naman, sa standard applicable kay ordinary share naman, ano yung purpose mo? Una, kapag yung purpose mo lang is ibebenta mo siya at saka kukuha ka ng dividend, malamang i-measure mo siya at fair value under tawag dito, under sa idea na dapat hindi siya lalagpas sa 20%. So, fair value mo siya i-measure. Kapag naman ang purpose mo ay may significant influence, ibig sabihin, may karapatan kang bumoto or yung percentage of ownership mo is may power of vote or kayang magkaroon ng significant na influence doon. Yung boto mo is kina-count siya every decision. So, investment in associate siya. And method niya is equity method. And same sila sa joint control equity method. Ito yung sinasabi ko kanina sa investment in subsidiary. You have the full control over that specific entity na binilhan mo. Ito yung purpose mo, to control that subsidiary. Kasi ikaw na yung magiging parent company. Kasi mas malaki yung percentage mo of ownership. So, i-classify mo siya if it is separate financial statement, pwede at cost, at fair value or equity method. And pwede rin siya consolidated FS. So ito yung mga standards, sorry. Ito yung mga standards na related sa mga classifications na ito. So tandaan mo lang if may problem ka na nabasa na a company purchase a ordinary share that represents 21% of 21% of ownership, malamang hindi mo siya i-measure at fair value. I-measure mo siya at equity method kasi mayroong ibang classification or mayroong ibang accounting treatment doon. Iba yung journal entry tsaka iba yung uh, subsequent measurement niya. So, ito yung initial measurement ng equity securities under the scope of PFRS 9. So, ano yung under the scope of PFRS 9? Again, ito yung all preference share and all ordinary shares that below 20%. Ito lang. Si financial, ito, itong first line, ito. Ito lang, si less than 20% lang yung under PFRS 9. Yung iba, PFRS 28, PFRS 11, tsaka PFRS 7 na yung iba. So dito, under PFRS 9, kapag yung equity instrument na yun is nasa scope of PFRS 9 pa, ang initial measurement natin, if FVPL siya, fair value excluding transaction cost. Ano ibig sabihin nitong fair value excluding transaction cost? Ibig sabihin, hindi mo i-include sa amount na yun, yung transaction cost. Kasi kapag bibili ka naman ng equity security, may transaction yun. So, titingnan natin nga sa example kung bakit siya i-exclude. And under FBOCI naman, fair value including transaction cost. So, anong mangyayari dito kay transaction cost? Magiging expense method siya dito kay FBPL. Pero kay um, FBOCI, parang i-add mo siya doon sa amount ng equity security. So, ito, illustration, acquisition of investment. The PAOI company has the following transaction relating to its investment during the year. So, noong January 5, nag-acquire siya ng 16,000 share of Kaliking Corporation for 1,500,000, paying additional 10,000 for brokerage and another 5,000 for commission. So, makikita natin dito sa January 5 transaction na yung 16,000 shares niya, yung cost niya is 1,500,000. Tsaka yung transaction niya na nagamit or transaction cost is yung brokerage fee at tsaka commission na 10,000 tsaka 5,000. So, total, meron siyang 15,000 na cost. So, magpe-prepare tayo ng journal entry. Paano ba natin siya i-initially measured under FVPL? Under FVPL, ito yung mangyayari. Sa financial asset at FVPL, ito, 1.5. Yung amount ng financial asset is at cost lang. Yung brokerage fee at commission fee, ginawa siyang expense under profit and loss. So, ang nangyayari dito, totoo nga cash na binayaran mo is 1,515,000 pero yung financial asset mo lang or yung amount ng financial asset mo lang is 1,500,000. So, nasa T account ngayon, 1,500,000 lang. Kasi ito, mapupunta tong dalawang to sa expense. Sa FBOCI naman, kapag FBOCI yung measurement natin, tingnan nyo yung January 5 transaction. It is very different from ito. Kasi, yung 515, yung 10,000 na brokerage at saka commission, inad niya dun sa 1.5. Kaya, yung financial asset value mo at FBTOCI is 1,515 at saka yung cash mo, 1,515. 'Di ba? So, nakita niyo yung difference. Sabi dito, i-exclude mo yung transaction cost, gawin mong expense, which is ito. Tsaka, sa FBOCI, isasama mo siya. Yung transaction cost, isasama mo sa amount mo sa fair value, which is nangyari naman dito. And also, yung dividend, meron tayong part ng dividend soon na itatackle. So, later na natin to i-discuss si dividend. Kasi, iba't iba yung iba yung measurement, tawag dito. Mayroong iba't ibang dividend na ma-receive. So, kaya, yun. Next, we have here the subsequent classification and measurement classification. So, investment in equity securities with fair value may be subsequently classified as either financial asset or FVTOCI. So, ano nga ibig sabihin ng FVPL? Fair value through profit and loss, and FVOCI, fair value through or other comprehensive income. So, measurement on the reporting date, fair value, yes, the same fair value, and change in fair value, magre-recognize tayo ng unrealized gain or loss under PNL or OCI. So, ang mangyayari dito guys is, nung na-receive natin yung or nabili natin yung ordinary share or preference share, time to time, nag-change yung market value yun. So, if nag-change yung market value na yun, kailangan nating i-realize yung paper loss or paper gain. Bakit siya tinawag na unrealized? Kasi hindi mo pa naman talaga yun. Parang wala ka pang lugi or wala ka pang ginansya doon. Kasi, paper loss nga lang. Nag-change lang yung value nung security mo or nung ordinary share mo na binili sa market. Marirealize mo lang siya kapag binenta mo na yung security mong yun. 'Di ba? So, 'di ba remember that FVTPL held for trading, FBOCI held for or available for sale. So, malamang ibebenta mo talaga yung equity security na yun under PFRS 9. Yung purpose mo dapat is to gain dividend and to trading. Ibebenta mo siya. So, marirealize mo lang tong gain or loss na to pag nabenta na yung financial asset. So, notes, unrealized holding gains or loss is also called holding paper or gain or loss. The unrealized gain or loss that was recognized during the year for the FBOCI is presented in the, anong ibig sabihin ng SCI? Statement of Comprehensive Income and Statement of, ano yung SCE? Di ko sure sa SCE. Statement of Comprehensive, ano yun? SCI is Statement Comprehensive Income. And yung SCE is, wala. SCI na dapat siya. So, the accumulated balance of unrealized gain or loss for FBTOCI is presented in Statement of Financial Position at saka sa changes in equity pala to. Itong SCE. Statement of Changes in Equity. Um, again, yung unrealized gain or loss natin, ipe-present natin siya sa, kapag FBOCI, ipe-present natin siya sa comprehensive income. Pero kapag yung accumulated balance ng unrealized gain or loss natin sa FBOCI is ipe-present natin sa financial position at saka sa changes in equity. So, computation ng unrealized gain or loss sa FBBTPL at saka FBOCI. Kapag sa fair value measurement, ano yung fair value measurement niya ngayon, current date? Ileless mo sa carrying amount or carrying value nung pagbili mo nung equity security. Parang same lang sila dito sa FBOCI. Tapos, isa-subtract mo sila. Kapag negative, malamang loss. Kapag positive, gain siya. So, again, ano yun? Fair value ng equity securities ngayon, kasi ngayon tayo mag-recognize ng gain or loss, tsaka yung carrying value niya nung pagbili mo nung equity security. So, it should be noted that PFRS 9 does not distinguish gain or loss as realized or unrealized. It is simply used as term as a net gain or loss to be recognized in the comprehensive income. So, ito yun. Computation of unrealized gain or loss. On January 1, 2020, Asuncion Company acquired 16,000 shares of Gambang Company for 1,500,000. Commission paid on the acquisition amounted to 15,000 pesos. On December 31, 2020, the market value per share of Gambang stock is 90 pesos per share. In December 31, 2021, the market value per share of Gambang stock is increased to 110. So what will happen here? Kunin natin yung um, journal entry using FBPL at saka FBOCI. So, ito yon. Sa case number 1, FBPL, financial asset, 'di ba? Initially measured siya na dapat yung expense or yung mga transaction cost is i-expend natin siya under P&L. So, ito cash 1,515,000 tsaka ito which is 1,500,000 tsaka 15 yung ating commission fee or commission expense. So, unrealized loss natin is 60,000. Paano natin siya na-compute? Ito. So, unrealized loss, fair value natin siya ngayon. Ano yung fair value? Noong January 30, 2020. Sabi niya, noong December 31, 2020, naging 90,000 daw. Naging 90 pesos. Kasi binili mo siya noong January. Pagdating nung December, naging 90 per share. So, kailangan natin siyang i-measure. Paano ba? 90 times 16,000 shares, which is 1,440,000. Tapos yung carrying amount niya noong January 1, which is 1,500,000. Kaya yung unrealized loss natin noong December 2020 is 60,000. So para natin siya i-record, unrealized loss through P&L and financial asset at FBPL, which is 60-60. Debit realized loss, unrealized loss, credit financial asset. Kasi magdi-decrease yung value ng financial asset mo. Pero pagdating nung December 31 naman, nag-increase ito sa 110. So, ang mangyayari dito is that yung fair value mo, which is ito, si 110 times 16,000 na shares is 1,760,000. Tapos yung fair value na gagamitin mo or ililess mo na initial carrying amount is hindi na yung 1,500,000 kasi nag-revalue na tayo noong December 2020. Dapat yung gagamitin natin dito na carrying amount or initial fair value is yung amount niya noong 2020. Ilan ba yung or how much is the fair value at December 31, 2020? It is 1,440,000. Kaya yung ilalagay natin dito sa baba is 1,440,000. So that's why yung unrealized gain natin pagdating ng 2021 is 320 na. So kaya siya nire-report na ganito. So punta naman tayo ngayon sa FVOCI. Dito si FVOCI, iba yung amount na ma-recognize natin. Kasi nga, sinama niya dito yung carrying amount. So si 1,515,000, sabi ko kanina, initially measured siya kapag FVOCI, i-include mo yung i-include mo yung transaction cost. Kaya 1,515,000. Now, ang unrealized loss niya under OCI is at fair value, which is ito 90 pesos times 16,000 shares, kaya siya naging 1,440,000 less initial carrying amount, which is ito 1,715,000, kaya yung unrealized loss natin 75. Compare dito kay FBPL, 1,500,000 lang yung initial carrying amount niya kasi nga hindi niya sinama si expense or si transaction cost. So yun yung kaibahan nila, guys, sa initial measurement. At ano yun, i-remember dapat natin yan. Laging tandaan. So next we have here the fair value at December 31, 2021, we have 110 times 16% share. Asan galing sa 110 ito? Change in fair value. Yan. Ibig sabihin, naging 1,760,000. Gagamitin natin yung carrying amount noong previous year, which is December 2020. So, which is 1,440,000. Kaya, yung unrealized gain natin under OCI is 320,000, which is same lang sa dito kay FBPL. Nagkaiba lang sila dito sa first adjustment natin kasi nga walang si FBPL at saka si FVOCI, magkaiba sila sa initial measurement. So, yun lang. Next. Note that statement of financial position of December 31, 2021, the amount presented in the net gain of 245 of 245 since i-deduct natin to siya si 320 tsaka si loss. It can also be computed by comparing the fair value on December 31, 2021 of 1,760,000 and initial carrying amount of nung January 1, which is 1,115,000. So, ayun. I-report natin siya under sa statement of financial position. Si FVOCI lang yung mape-present natin sa statement of financial position na may gain na 2,045,000. Next. So, the-recognition, paano ba natin ma-recognize si FVPL equity security? Ano ba yung ibig sabihin ng the-recognition? Ibig sabihin nun kapag 'di ba recognition, meron tayong control over that equity security. Pag ma-recognize na ngayon, ibig sabihin wala na tayong control doon. Ibig sabihin we give up na. Give up na natin yung financial statement na 'yon, ay financial instrument na 'yon. So in what way? Sa pamamagitan ng pag-sale ng equity security pag nabenta na natin siya. So, paano ba natin ma-recognize yung gain or loss on recognition? Sa FBPL or profit and loss, consideration received, ito yung natanggap natin na cash amount. Dideduct natin yung transaction cost. Kasi pag bebenta natin yun, may transaction cost naman talaga. Anong ibig sabihin ng transaction cost? Let's say, broker's fee. Yung may broker pa na babayaran pa yung broker. So yun, i-deduct mo dun sa consideration received mo kasi in-net off yun. Direct net off yun. Tsaka, yun yung maging selling price. I-add mo kapag may na-obtain kang asset kasi ibig sabihin nun, di ka lang na um, ibig sabihin nun, di lang cash na receive mo, naka-receive ka rin ng ibang asset, i-add mo siya doon sa net selling price at saka i-less mo yung new liability assumed. Saka i-deduct mo yung carrying amount at the date of the recognition or at the date of sale. And i-perform the given operation, so makakakuha ka na ng gain or loss. Kapag negative loss, kapag positive gain. So ito yung journal entry natin. So to adjust the changes in fair value, ito yung ginamit natin kanina dito. Ito dito. Dito. So same journal entry yan. So financial asset at FVPL if it is gain. Kapag loss naman, nasa taas yung loss. Nasa debit side. So to record the sale, cash, which is the consideration received, the loss on sale, kapag may loss tayo dito, and debit, financial, credit, financial, asset. Ba't ganito? Ba't mali? Tama. Mali tong journal entry, mali tong XX guys. Pasan siya. Dapat, dito yung XX, saka dito yung XX niyan. Mali yan guys. So, nasa credit side si financial asset kasi mawawala na siya sa atin. And kapag may gain or sale ka, nasa credit side pa rin siya. Kasi income yun. Or parang part yun ng income. Parang ganun. Under FVPL. So, may pala to, kulang tong journal entry. Dapat loss on sale dash FVPL, at saka gain on sale dash FVPL. Next, the recognition of FBOCI equity security. When the recognized gain or loss on investment in equity securities classified as FBOCI, it is computed as follows. Consideration received, new asset obtained, tsaka new liability assumed. Carrying amount kapag positive gain, kapag negative loss. So, napansin nyo dito sa kaibahan nila is that wala siyang transaction cost. Consideration received lang. Kumbaga, yung transaction cost mo dito is i-expense mo naman kapag recognition na. Si transaction cost, i-expense mo siya under FBOCI kapag ibebenta mo. So, ito, magre-recognize ka ng loss on sale. Under FBOCI pala guys, wala tayong loss on sale na account. Kaya nito, loss on sale, wala. Under FBOCI, walang loss on sale dyan. Ang gagamitin natin, yung unrealized loss pa rin under OCI. So kapag unrealized loss, nasa debit side si unrealized saka si credit i-credit natin si financial asset. So yun lang. Tapos i-record natin yung consideration na na-receive natin, which is cash, transaction cost. Yun, i-expense natin siya. Si transaction cost pero at FBPL, hindi siya at FBOCI kasi lahat ng expense nare-record through FBPL. So nasa siya i-report? Sa Sa comprehensive income, sa income statement. So kaya siya at FBPL kasi expense natin yun nung pagbenta natin nung FBOCI natin na equity security. So under that is financial asset at FBOCI. So adjusted accumulated gain or loss. Ang nangyayari dito kasi guys, lahat ng unrealized gain at saka unrealized mo na mula noong pag-acquire mo ng FBOCI na equity security hanggang sa nabenta mo siya, i-accumulate mo yun lahat, i-add mo lahat ng loss, i-add mo lahat ng gain, tsaka lalagay mo sa retained earnings. So paano ba to? Kapag mas malaki yung loss mo, ibig sabihin mas malaki yung loss amount mo kaysa kay gain, malamang sa retained earnings mo nasa debit side. Nandito siya. Kasi loss minus gain is equals to retained earnings. Didideduct mo lang sila. Kapag sino yung mas malaki, pag malaki si unrealized loss, doon ilalagay mo siya kay or i-debit mo siya si retained earnings. Pag mas malaki naman si unrealized gain, i-credit mo si retained earnings. So, yun yung logic niyan. So, yun na guys. That's the difference between the recognition of FBOCI at saka FVPL. So, we have here an example kaso wala tayong sagot dyan. Sagutan natin yan next meeting. Char lang. So, ito. Try to record this journal entry. I-journal nyo tsaka pa-check nyo sa akin. Submit your answer sa akin mamaya or tomorrow to check if um may naintindihan ba tayo sa topic. So, yun lang. May mga classifications naman dito. So, yun. Thank you very much for listening. So, next time, we will also be discussing the dividends kasi may dividends pa to. Ano yung iba't ibang dividends? Meron pa tayong liquidating dividends. And ayun, may ibang accounting treatment din doon. So, yun lang. I hope i-review niyo yung video tsaka magbibigay ako ng copy ng PowerPoint, guys. Just study well and God bless sa ating lahat.